Hi, my name's Tim Leonard and I'm the Director of Mortgage Choice in Bayside. I'm here today to talk to you about some of the changes across the financial sector and how it's affecting your ability to gain a home loan. I'm sure you're all keenly waiting the end of the Hayne Royal Commission. It's changed the landscape in lending forever, and whether you're working in the financial sector or a consumer seeking finance, you need to learn to adapt to these new changes. But investors and home buyers needn't worry too much moving forward. Making some changes to suit the lender's guidelines will go a long way in ensuring your finance applications are completed smoothly. Train yourself to read your own supporting documents or speak to your broker before applying for finance to understand your living expenses. You may find a bunch of issues that need to be addressed before your loan is submitted. When a credit assessor works through your living expenses, they use a formula that measures your day-to-day expenses depending on your family size, income and even postcode, HEM or Household Expenditure Measure. Banks have never focused heavily on living expenses, but they do now. Every dollar spent needs to be accounted for, and these compulsory and discretionary costs change your lending capacity. Things like groceries, clothing, transport, insurance, recreation, rates, telephone and internet, to name just a few. Most lenders now have over 12 types of financial commitments that are accounted for. Once you've established your true monthly expenses, you need to draw your attention to your financial statements and accounts. Never overdraw your savings accounts. Never go over your credit card limits. Never make a late payment on any liability. Close down unused credit cards and store cards and reduce excessive credit card limits. These are all visible by an assessor on the new credit reporting system. This system scores your credit rating and has a significant influence on any loan you apply for. Many in the financial sector believe the new reporting system is unfair, but it's here to stay, so we all need to work with it. So if you're in the market to buy a new home, then ask your broker if your pre-approval has been assessed by a human or auto-approved by an electronic system. The difference is critical and can result in your pre-approved loan being declined. If you're heading to an auction, please make sure this process has been completed by a credit officer and your pre-approval is in order. Don't be too hard on the banks if your loan becomes difficult to approve. The banking regulator APRA is flexing its muscles and adding extra layers of examination to every application, and this is causing costly delays for everyone. So I challenge you today to look closely at your bank statements, highlight some of the costs you feel may negatively impact your ability to gain a credit approval, and it's critical you understand your numbers and take action before applying for a loan. So if you'd like to discuss anything about today's chat, please feel free to call our office on 9589 7277.